So we've all had to start somewhere in real estate investing, and I personally remember getting started myself. My name is Austin Zaback, and I'm a real estate agent, I'm a real estate investor, and I've sold a little over 2,000 houses over the last 8 years. And in a lot of instances, I had to learn the hard way. This real estate beginner video tutorial is going to guide you. It's going to cover all of the basics and give you the blueprint to my top 3 strategies for success. So I'm going to take you guys step by step into the 2022 real estate market, and I'm going to keep things very simple so you can get started today. Now let's just go ahead and jump right into the video. According to the latest news outlines, the housing market is about to crash and the world is basically over. Not really, but you get the point. Yes, you should always keep an eye out for the bigger picture, but the most important thing to do is to do your research. Your backyard needs to be your highest priority because the housing market is not a one-size-fits-all. For example, I reside in Arizona, and the Phoenix real estate market has been one of the hottest markets in the US. In fact, the Case-Shiller House Price Index, which measures repeat sales, was up 31.3% over the year in Phoenix in April, well above the national average increase of 20.4%. The median home sold price in Phoenix right now is around $470,000. Now on the flip side, Tucson, which is a little over 100 miles away, is only growing at about 14.2%, and prices are predicted to rise by about 8% this year, with their median home sales price being about $385,000. Now there's a big difference in those two statistics. I do my research and I make sure that I understand my own backyard for not only my clients, but also for myself. Real estate is a localized investment, so you can always find a deal in your own backyard. Don't let the headlines cloud your judgment and cause you to worry. The key is to do your due diligence, and then you can find the deal, and when you do, you can lock that thing down. Which brings me to my next thing. Get good at one thing. I see way too many people try to get started in real estate and all they do is get stuck and caught up in trying to do everything. They watch people on Instagram and social media. They're looking at guys like Grant Cardone and Manny Kashban, Tariq El Moussa. They're watching Selling Sunset on Netflix. I mean, they're looking at everybody. People want to fix and flip. They want to be $1 million real estate agent. They want to wholesale a bunch of real estate, and the list goes on and on. I mean, there are so many different verticals when it comes to real estate. But that's exactly the problem that I'm trying to point out. My biggest piece of advice to anybody new getting into the real estate world is to know that if you eventually want to do more than one thing, you totally can. But in the beginning, take Gary Keller's advice. He wrote an entire book on it, and that is the one thing. You need to focus on one thing in the beginning. Because if it's just you and you don't have a big team, you don't have a ton of experience, and maybe you don't have a bunch of money to blow or incredible credit, you really do got to focus on one thing and get really good at that one thing and let that one thing become your cash cow. Now that cash cow will eventually allow you to go into other verticals of the real estate industry. Then eventually you can get into multifamily, you can get into commercial, you can eventually fix and flip, and of course the list obviously goes on and on. For now, pick something more on the simple side. Get really freaking good at it and make a ton of money at it. And as you make a lot of money and you get really good in real estate, well, they say it's a really small world. You're gonna be networking, you're gonna be rubbing shoulders, going to dinners, you're gonna be meeting new people, and all of a sudden, you're gonna get to learn about all of these other real estate verticals. And at that point, of course, once you've made a lot of money, you have more experience under your belt, and you've rubbed shoulders with all of the right people, the natural evolution will start to take place. You'll be a seasoned investor, you'll eventually probably do ground up development or multifamily, whatever it might be. But trust me when I say that eventually it will just evolve. You're not gonna have to force it. You're not gonna have to go out and bang your head up against the wall to make it happen. It'll just be the frequency that you're operating at, and you're gonna be so dang good at that one thing, doing all of the other meetings and everything we just talked about, that it will just happen. Trust me. Which brings me to my next point. You make money in the buy. You know, underwriting a deal is the most important aspect of the entire deal. Even if it's a deal in rural Alabama, you could make money on that deal if you have the right numbers and you buy it right. And really the only way that you learn how to run your numbers is by doing it over and over and over again. So you always need to pay below market value. Now, there's a thing called the MAO. That stands for the maximum allowable offer, which is basically the top of how much I'm willing to pay for the numbers to still make sense. So depending on the type of deal that you're doing in real estate eventually, how you underwrite that deal or how you run the numbers of that deal, you will ultimately do that differently. For example, a possible Airbnb that you're gonna buy and hold is gonna be different than how you would underwrite a deal where you're planning to wholesale it. Maybe the property needs a bunch of work. I'm gonna have to take that deal and I'm gonna have to input it and look at a very specific formula, and I'm gonna have to work that deal backwards until I arrive at my MAO, which is my maximum allowable offer, to make sure that I'm getting it at the right number. So basically, in conclusion, you've gotta make it make sense, okay? The math is actually very easy. For example, let's just say you're looking at a deal to buy it as a long-term rental. You got to look at, okay, what is my down payment or my cash out of pocket? Typically 20 to 25% for an investment property, right? Now, if I buy the property, what is my principal payment going to be, my interest, my tax, and my insurance, otherwise known as your PITI? And then, of course, what will it potentially rent for? What sort of maintenance am I going to have to do to keep the property in good shape? Is there an HOA? Do I got to do landscaping? Maybe I need a property manager. See, these are all things that you're going to have to do before you actually ever purchase a deal. So for example, if you're buying a long-term rental, a lot of people, they want to make cash flow, which means after all of the expenses that are going to happen with buying the property, right? Everything we just talked about, they want to know that they're going to make cash on top of that every single month. So let's just say that all of your expenses, your principal, your interest, your taxes, and your insurance are $2,000 a month. And that of course includes your HOA if you have one, a property manager maybe, and whatever else. But let's say you could rent it for $2,500. So your possible cash flow, right, your projected cash flow would be $500 a month in your actual pocket. And of course, you reap all of the benefits of owning real estate, like the fact that the tenant is paying down your mortgage, right? And you have all the tax benefits associated with that. A lot of times I see people where they get into a property and they don't have any cash flow, and all of a sudden the air conditioner goes out or the water heater goes out, or there's a problem, or maybe the tenant doesn't pay rent for a couple of months, or maybe it sits vacant for a couple of months and you can't find a tenant, right? Where are you going to pay for all of that? And that's why being cash flow positive is really important, because a lot of times you can take that additional cash flow and you can just set it aside, so when something happens, when something comes up, you can afford to pay for it. And again, we're of course just talking about a long-term rental. But the point that I'm getting at is there's all of these verticals. So you've got to pick a vertical, and then you've got to get really good at that vertical, right? You've got to study that vertical. You've got to do it day in and day out. For me, when I got into real estate, I got started wholesaling real estate, okay? And if you're not familiar with what wholesaling real estate is, in my opinion, it is one of the most simple ways to get started in real estate investing that will open up so many doors in the future. All it is getting a property under contract below market value, like we talked about a little while ago, and then just taking that contract and flipping the contract to an end buyer and making a profit. And I probably wholesaled somewhere between 200 and 500 houses before I ever bought a rental property, before I ever fix and flipped a property, and really I probably wholesaled 100 or 200 before I even became a real estate agent. And the reason I tell you that story is because I got really dang good at wholesaling before I ever went and attempted anything else. Now, obviously, we do multiple different things. I've got a really big team, and we're really able to scale multiple verticals of the real estate industry. But if I had to summarize the entire video on tips for new real estate investors, it would really be to get really good at one thing. Pick your vertical. Are you going to fix and flip? Are you going to raise capital? And are you going to fix and flip? Are you going to wholesale? Are you going to go syndicate and do multifamily? Are you going to do commercial? Are you going to do ground up development? What are you going to do in the beginning? You got to get really good at that. And I think you got to get really good at focusing on your own backyard. You're going to rub shoulders with people. You're going to talk to people. And you've got to be able to know that market inside and out. People have got to be able to give you a crossroad. Like, hey, what's on the corner of this and that? And you've got to be able to tell them, there's a Walgreens on that corner. There's a CVS on that corner. I know exactly what is on that corner. I think becoming a new real estate investor is very simple, but I think a lot of people overcomplicate it, and definitely a lot of people try to do way more than they actually can in the very beginning. They bite off more than they can chew. I would suggest you keep it very, very simple. You do it for a couple of years. You stack cash. Find that one thing that will make you a bunch of cash, okay? And then once you stack the cash, the doors will fly wide open, I promise you. And I actually just created a real estate course where I break down everything on wholesaling. Now in the future, I'll probably break down other types of the real estate verticals that we do as well. But for now, I've got a course, Wholesaling 101. Now I'm going to link everything down below. If you want to check it out, definitely go check it out, but don't feel like you have to. But at the end of the day, get out there and make your goals and your dreams a reality. If you're a new real estate investor, find somebody that you want to be like and study their every move. Having a mentor, I believe, is very, very important. Whether it's me or somebody else, you got to find somebody that you can relate to, and you got to literally take notes every day. Study everything they do. Walk like they walk, talk like they talk, dress like they dress. Literally do what they do, and you will become successful with enough time. It really is just time, and if you quit too early, you'll never make it. The key is don't quit. Get committed, stay committed, and do whatever you got to do until you achieve success. My name is Austin Zaback. I appreciate you for watching the video. If you haven't already, I would really appreciate it if you would smash the like button for the YouTube algorithm. Subscribe if you have not already. Drop in the comment section what you'd like to see in a future video. I'd love to interact with you, engage with you, give you advice, whatever I can do to provide value. I would really love to do that, and I'd love to make more videos just like this. I look forward to seeing you in the next one.